on the US markets. The Dow erased its triple-digit intraday drop to end Thursday's trading session in the green just barely. The other two indices recovered from similar falls, having hit key technical levels on the lower side. Both of them ended about 0.2% down. Here's Rami Innocencio of Bloomberg News with a wrap of all the action on Wall Street.
U.S. investors were a bit nervous on Thursday, taking the S&P 500 down about 0.25%. Now, we're actually looking ahead to Friday and the April jobs report. Wage growth will be in focus for clues to inflation, as well as, of course, Fed rate hike policy. As for the big stock movers today, we've got to talk about Tesla. By now, you must have heard that Elon Musk told his investors not to buy the stock if they don't like volatility, and that, quote, dry analyst questions were actually killing him. Shares fell to their lowest in more than a week there, but earnings actually beat estimates. In food news, Yum Brands jumped about 3% and the most in 3 months after really beating the highest EPS estimate. Nacho fries apparently at Taco Bell were a big hit, and that helped comparable sales beat, even though Pizza Hut and KFC comps missed there. Still, Baird raised Yum to outperform from neutral. And in music, Spotify as well as Pandora were in the spotlight. Investors thought Spotify would kill subscriber growth estimates. Instead, it just met them, and then shares fell about 6%. That is the most ever in its short public history. Now, for Pandora, though, that was a different story. Shares jumped 6% after hours. Its loss per share was better than expected. After all of that, we look ahead to Friday in the U.S. Alibaba reports before the opening bell, and of course, the April jobs report. Rami Innocencio, Bloomberg News, New York.
Oh, apart from the jobs report, you're also going to have to watch out for the negotiations that are taking place in Beijing between the US and China with regard to trade. So the US has tempered expectations of a major breakthrough from those discussions, which are ongoing, in fact, going to happen today, and which are expected to focus on US concerns over China's state-driven economy, forced technology transfers, and America's widening trade deficit with China. And speaking about that deficit, the US Commerce Department reported that America's merchandise trade gap with China has widened by 16% to $91.1 billion in the first quarter. Kevin Cirilli of Bloomberg News has this report on the trade talks between the world's largest economies.
6 key issues have emerged from the administration's perspective as the topics for the negotiations with China, as the share of tariffs, led, of course, by Treasury Secretary Steven Mnuchin, touched down in China. Of course, they're going to be talking about technology, steel overcapacity, market access, the U.S. trade deficit, something that we've heard a lot about from not only Secretary Mnuchin, but also Peter Navarro, someone who is accompanying Secretary Mnuchin on this trip, who has more of a nationalistic perspective. The Chinese state-driven economy and market manipulation. Look, President Trump has consistently said that that deficit is something that he wants to bring down. And just a few weeks before the president is likely going to meet with North Korea dictator Kim Jong-un, expect national security and China's role in the Korean Peninsula to also come up. But how are the Chinese responding to what, quite candidly, has been some brash rhetoric? I want to pull up now what Chinese state media wrote in an op-ed earlier this week. Quote, the European Union has said bilateral trade with the U.S. should be balanced and mutually beneficial, and that it will not negotiate under threat, nor will China. It will stand up to the U.S. bullying as necessary, and as a champion of globalization, free trade, and multilateralism, it will have strong support from the international community.
All right, looking at the Asian markets now, it seems most of them are trading in the red. Remember, the Japanese market is shut today, but the Chinese markets have just opened, and so is the Hang Seng. The Hang Seng is trading lower by about 0.25%. But with that, let's turn to Jayesh Khilnani and Agam Vakil for the trade setup for the day in India. Morning, guys. Jayesh, how's it looking today?
Morning, Alex. Looks a little weak as far as the Indian markets are concerned because the SGX Nifty, that is indicating towards a start which will be lower by 35 points and a start below the 10,700 mark for the Nifty itself. Now, if you look at some of the cues that we got from the areas that trade overnight, most of them actually ended lower, with Tata Motors ending more than 1.4% lower, while we had Wipro, Infosys and Dr. Reddy's, which also closed lower in trade. As far as the gainers were concerned, we had Vedanta and HDFC Bank, which managed to close positive, while we had ICICI Bank, which closed flat. Now, if you look at some of the commodity cues that we are getting, oil is trading absolutely flat after gaining for about 2 days. Remember that overnight it did manage to close 0.8% higher, but currently trading absolutely flat. As far as the base metals are concerned, we got some cues over there. The index itself on London Metal Exchange closed lower by about 0.8%, which was largely led by aluminium, which declined more than 2% and in fact snapped its 3-day winning streak. We had zinc and nickel, which were the other top losers in trade, each of them losing more than 1%, while we had copper and tin, which managed to close positive for themselves. Now, if you look at the Shanghai Futures Exchange, the base metals are in fact trading on a mixed note, where we have copper and aluminium, which are trading positive, while we have zinc and steel, which are trading negative. Zinc being the top loser, that is down about 1.7%. As far as gold prices are concerned, once again we are looking at absolutely flat trade near the 1312, 1313 mark. Now, this is on account of the dollar index that has shown a resurgence in the last week or so. So the gold prices in fact ended lower 3 days for this week and currently trading flat. In terms of the fund flows that we got, some interesting picture, but it's only start of the month, so no real conclusions that can be drawn. The FIs in fact sold 148 odd crores, while the DIs have also sold. The FIs in fact for the month have been net sellers, but like I was telling you, just early days in the month, so we'll have to wait and watch if this trend actually continues, while the DIs have also been net sellers in this month itself. Now, if you look at some of the key indices, while the Nifty Bank managed to eke out gains for itself, the broader market closed negative, where we had the Nifty Mid Cap, which actually declined about 1.3%, and we had the Nifty Small Cap, which also managed to close negative. As far as the losers are concerned, it was largely led by the IT space and HCL Technologies in particular. That index ended about 2% lower, while we had the Nifty Real Estate Index, which also ended about 1.7% lower. As far as the gainers are concerned, we had the Nifty Metal Index, which surged about 0.8%, while we had the Nifty Bank, which managed to close positive for itself. Now, if you look at the India Wix, that actually made a comeback. It surged about 1% and is now close to the 13 mark that we are watching out for. As far as contribution is concerned, as far as gainers are there, we had ICICI Bank, Sun Pharma, HDFC and Axis Bank, while we had the losers HCL Tech, like I was telling you, Reliance, L&T and Kotak Mahindra Bank contributed to the losers. But Agam, what can we expect from the F&O space?
Well, it's been a subdued day of trade yesterday, and as per the indications of what we're looking at, we're expecting consolidation based on the cues that we're getting from the global indices. That said, there was again no change at all in the open interest for the Nifty futures, and when it comes to the Nifty Bank futures as well, largely unchanged with just about 1.5% added in terms of open interest. Coming down to the volatility index as well, it's moved up around 1.13, slightly inching towards the mark of 13, but still relatively low levels, and the put-call ratio also remains largely unchanged at around 1.52. What we've seen is in terms of changes in OI in options is more writing in the 10,900 call now, so that's shifted from the 11,000 mark, and on the lower end straight up right up to the 10,400 is where we are looking at some amount of writing. But as per the indications of the previous few days, we are looking at the base formation around the 10,500, 10,600 mark. That said, we have new entrants in the F&O band, so Jet Airways and Just Dial move in, And among plenty of stocks that I'm watching out for, Interglobe Aviation along with Jet Airways had a rough ride yesterday. A lot of shorts building in. In fact, 11% added in open interest. And among others, HCL Technologies continued its down run, and we've seen a cut of around 7.5%, another 13% added towards shorts in open interest. So some of these counters have been extremely weak, and we'll have to wait and watch whether or not there will be some amount of recovery in today's job trade.
All right, thanks for that, Agam. Let's take a quick check on the rupee and the bond market, and starting with the currency market. Of course, if you can pull up the WCRS function, essentially pulling up what the dollar stands at as opposed to all of the international currencies, and you'll see that there are three currencies there that are barely moved against the dollar in the last trading session. You'll see the Hong Kong dollar, you'll see the Indian rupee, and you'll see the Philippine peso. Now, of course, the Indian rupee has moved very marginally positive. That's ended 0.03%. It doesn't even show in that chart. And that's indicative of how the market has been over the past couple of sessions. If you look at the dollar index, you'll see that over the past month, it's moved up about 2.5%. Of course, over the last few sessions, you also have investors that are digesting somewhat what the Federal Reserve came and said in its latest policy report. In fact, the nature of the statement more than anything else, the policy rates, of course, were kept unchanged. With regard to the bond market, the Indian benchmark 10-year bond yield remained unchanged yesterday at 7.735%. All right, with that, let's shift focus to the commodity space, and Jayesh Khilnani is back to tell you all that he didn't tell you during the trade setup. Jayesh, over to you.
So Alex, as I was mentioning about the oil prices trading absolutely flat, but remember that overnight we did see a 0.8% surge for the WTI, and this is on the back of day before's 1% gain that we saw. Now the market is primarily focusing on two factors. One is the dollar and how the dollar is moving. So yesterday, on account of the Federal Reserve leaving the interest rates unchanged, we had a snap in the dollar index and it ended lower. And the other factor that the oil markets are really watching out for is the Iran sanctions, whether or not they are going to be imposed on Iran. And we understand that Trump is likely to decide on or before May 12th. So we'll stay on top of that development and get you the latest updates as well. But as far as the base metal index is concerned, we saw that it ended lower, and which was largely led by aluminium. So aluminium was down about more than 2%, and that was the top loser in trade. Now we have one comment from Vedanta, and they say that they see more volatility in the aluminium market on account of the sanctions that have been imposed. As far as other base metals are concerned, we had zinc and nickel, which declined over 1% each, while we had copper and tin, which ended positive. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a mixed note, with zinc trading about 1.7% lower. As far as gold prices are concerned, once again, we're looking at flat trade. But remember that gold has, in fact, declined for 3 days in this week so far. So we'll have to wait how the week actually closes. And it has actually, overnight, it climbed, and that was the first positive close that we got on account of the Federal Reserve leaving the rates unchanged and a snap in the dollar index.
Thanks for that, Jayesh. All right, Lanco Infratech's fate is nearly sealed. The company may be headed for liquidation after its lenders rejected the highest bid put in by Triveni Earth Movers. Now, the 270-day resolution deadline also ends today. Vishwanath Nair has all the details in this report.
The resolution professional appointed in Lanco Infratech, Savan Godewala, has decided to go to the NCLT to file an application for liquidation of the company. This decision was arrived at after the lenders assessed a bid that was submitted by Triveni Earth Movers, but then found that that bid was not favorable to them, and then did not give about 75% of the lenders' vote, which is necessary for a bid to go through. Of course, Lanco Infratech owes its financial creditors more than 45,000 crores, according to the claims that are admitted by the resolution professional. Of course, these 45,000 crore, this 45,000 crore number includes all the guarantees that were issued by Lanco Infratech in favor of its subsidiary. Now, according to the people who are involved in this case with spoken conditions of anonymity, Lanco Infratech's liquidation value stands at close to 1,400 crore. It is one of the 12 large cases which were sent for immediate insolvency action by the Reserve Bank of India back in June 2017. Of course, no resolution has come up at the end of the 270-day period, because of which the liquidation process is being triggered. The 270-day deadline for Lanco Infratech ends on the 4th of May, and that is when the resolution professional will go to the NCLT.
All right, Vedanta reported its fourth quarter earnings post-market hours yesterday. Nikki Mirchandani is here to tell you all about the fine print. Nikki, it was a bit of a surprise, wasn't it?
It was a good quarter for Vedanta, operationally very strong quarter. Q4 EBITDA stood at 7,837 odd crore, which means an uptick of nearly 7% year-on-year basis as compared to the degrowth figure that we were estimating yearly. And sequentially, it is almost 16% higher. Now, the growth has come on account of both your volume as well as higher LME prices. Growth is mainly driven by the Zinc India, Oil and Gas and Aluminium division. This, to an extent, offset the kind of degrowth that we saw in the iron ore and the zinc international business. Margins came in at 28% as compared to 33%. However, the higher commodity prices offset the kind of currency appreciation and the commodity inflation to an extent, which to an extent balanced out the margin and prevented further contraction. The company reported an exceptional gain of around 2,869 crore. Now, this includes reversal of an impairment charge on plant, equipments and assets. Also, importantly, the capex has been revised for the company for FY19 from 1 billion to 1.5 billion, mainly on account of Zinc India and Oil and Gas business. If you look at the segmental breakup, aluminium business rose 32% year-on-year and more than 100% jump that we're looking sequentially. Oil and Gas also 34% uptick year-on-year and 11% on sequential basis. However, iron ore business that declined by almost 50% year-on-year basis and also 16.5% on sequential basis, which in turn weighed on the operating performance of the company to an extent. Back to you.
All right, Nikki, that's about Vedanta, but what about Ambuja and what is the street expecting from? All right, we'll of course have to come back to Nikki. Nikki, are you still with us?
Yes, yes.
All right, Nikki, so what's the estimate with regard to Ambuja today?
All right, we are looking at an uptake of at least 14% for Ambuja at a number of around 2,891 crore. EBITDA is also seen inching up for this company to a number of 20% to 471 crore. Margins are seen expanding a tad bit to 16.3% as compared to 15.6%, and PAT is seen up as much as 21% for the counter. Volume, importantly, which has been the factor which has been playing out for all the pan-India players, we're looking at a 5% uptick there. EBITDA per ton is seen 14% higher to 746, and realization per ton is also seen up as much as 8.7%. What goes behind the making of these estimates? Realization is expected to be supported by the highest share of sales in Western India. That, along with your good operating performance, is expected to percolate down in the EBITDA numbers. However, we're expecting some kind of power and fuel costs to kind of negate the kind of growth that we would otherwise see in all the cement counters. The key things that we like to keep an eye out beside the power and fuel cost trend will be the volume growth and recovery outlook for the calendar year, because it's the first quarter for Ambuja Cement, and also the cement pricing outlook for that region. Back to you.
All right, thanks for that, Nikki. Let's move on now to the stocks and news that you have to watch out for in trade today. Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Morning, Alex. I'm going to begin with earnings once again. So, Thirumalai Chemicals, a very strong set of numbers coming in from that chemicals player. While revenues grew about 8%, net profit almost doubled to 40 crores. Why was that? Because operational leverage kicked in. So, EBITDA was up 56% and EBITDA margins also came in at 21% versus 14%. So, good set of numbers there. Good set of numbers also from Trent on an adjusted basis. Revenues grew by 18%. Net profit was down 52%, but that's because there was an exceptional gain of 25 crores in the base quarter. So adjusted for that, at least the operational performance looked good. EBITDA is up 82%, margins at 4.8 versus 3.1. You also have Nucleus Software, a weak set of numbers coming in from this IT player. Unlike most of the peer group companies, revenues were up 5%, but net profit fell 6% on a Q-on-Q basis, and EBIT was down 18% with a 300 to 400 basis points knock on the margins as well. So they should react negatively in trade today. The other part, you also have Tata Motors, which will sell its defense and aerospace portfolio to Tata Advanced Systems, which is a subsidiary of Tata Sons. So now there are two bits to it. One, they will sell their defense business for an upfront consideration of 100 crores, and then there will be a deferred consideration of up to 1,750 crores over a 15-year period. And secondly, they will sell TAL Manufacturing Solutions, and that will be for an enterprise value of 625 crores. So watch out for Tata Motors. The other part, you have J. Kumar Infra Projects. They've won an order for about 445 crores for Pune Metro. So you could see some positive reaction there. ET report says that Bharti Airtel could sell 25% in its African unit to raise up to $1.5 billion. There's a Mint report which says that Aditya Birla Capital is in exploratory talks with an alternative asset manager for distressed assets business. So watch out for that name as well. And lastly, Fortis Healthcare, a couple of bulk deals over there. You have York Asian Opportunities, York Asian Strategic Metric Master, and York Multi-Strategy Master Fund. These funds together, which have bought about 4.5% stake in the company yesterday, whereas UBS Principal Capital Asia sold 5.4% stake. So let's see how that one reacts.
All right. Thanks so much for that, Shraddha. Well, the GST Council will meet today to discuss a possible simplification of the return filing process and also the possible introduction of a sugar cess. Now, the 27th meeting of the Council will essentially be conducted via video conferencing. Nikunj Johri tells you what to expect in this report.
The GST Council in its meeting on May 4 is going to discuss a number of issues ranging from simplification of GST returns to imposing a new cess on sugar. According to a proposal discussed in a meeting of state and central government officials of GST, the new proposal would be something like wherein all sellers will have to upload all their invoices, and buyers will have to acknowledge all these invoices, based on which buyers will get credit. Now, if the government finds out that the seller has not paid the tax liability, the first priority of the government would be to recover the tax amount or the tax due from the seller. In case where the tax liability from the seller cannot be recovered, the buyer will be asked to reverse its credit by the tax authority, or buyer will have to pay that tax liability. Another item on the GST Council's agenda is to impose cess on sugar, and at the rate of around 5%, and this comes after the government decided to subsidize sugarcane farmers at 5.5 rupees per quintal, since a large of their areas were pending, or their dues were pending from sugar mill owners. Now, the third item, or the third important item on the GST Council's agenda, is to turn GSTN, or the Goods and Services Tax Network, into a publicly held company, meaning the state and the central government would increase their stakeholding further in GSTN by another 51%. Now, the idea behind increasing the state and the central government stake in GSTN is that the government fears that no data or the crucial data of traders should not be compromised, since it's held by private sector players like HDFC, ICICI Bank, HDFC Bank, and some other private sector players.
All right, we'll bring you updates from that council meeting as and when we get them. But let's move on. Karnataka goes to the polls on the 12th of May. And while it's being touted as a Congress versus BJP battle, the JDS essentially that's led by former Prime Minister Deve Gowda and his son Kumaraswamy may also have a crucial role to play in the formation of the next government. So what's at stake and what are the key factors at play? Here's Kaushik Vaidya kicking off coverage on Battleground Karnataka.
Here's how the numbers stack up in Karnataka and why the BJP's chief ministerial candidate B.S. Yediyurappa is so important to the party's fortunes. Here's how Karnataka voted in 2013. 122 seats for the Congress, 40 to the BJP, 40 to the JDS. 5 years before that, in 2008, it was the BJP under Yediyurappa that formed the government with 110 seats and the support of a few outsiders. So what happened from 2008 to to 2013. By 2013, Yediyurappa was out of the BJP. The mining Reddy brothers were out of the BJP. So were their associates. What happened as a result? They cut into the BJP's vote a lot. The central Karnataka region, that's Shimoga where Yediyurappa comes from, and that's Bellary where the Reddy brothers come from. See that from 2008 to 2013, much of that got wiped out for the BJP. You had two other regions that the BJP fared worse in. That's the Bangalore region, that's Bangalore city in and around it, and the coastal Karnataka region that the BJP lost support in 2013. The Yediyurappa return to the BJP was before the Lok Sabha election of 2014, and the Reddy brothers are present in the BJP in this election as well. Two of those brothers have tickets given to them, and 6 of their associates have been as well. So that's a double-edged sword. The cloud that these leaders bring back to central Karnataka for the BJP, but at the cost of their past record being questioned by the rivals. For the Congress, this is a two-front battle. In North Karnataka and Central Karnataka, the Congress is fighting the BJP, and in South Karnataka, it's fighting the JDS. So what's Chief Minister Siddaramaiah doing? He's fighting from one seat from Mysore district, the Chamundeshwari in the south, and one seat from the north in Badami in Belgaum district. So it's a two-front battle for the Congress, remember. The halfway mark for Karnataka is 112, 113. So if either fails to reach that mark, this JDS number, watch that closely on the 15th, that could be the difference.
All right, the major dust storm hit parts of Rajasthan and Uttar Pradesh, killing nearly 100 people and leaving a trail of destruction. Trees and electricity poles were uprooted and houses were severely damaged. Nearly 150 people were injured and rushed to hospitals. Relief and rescue teams have been pressed into service to clear the debris and restore power supply. Now, Prime Minister Narendra Modi has directed officials to coordinate with states and to ensure speedy relief and rehabilitation to those affected. A report also emerged from the Met Department that another dust storm may hit parts of UP and Rajasthan in the next 48 hours. All right, we'll bring you updates on that and a lot more in the world of business, politics, and everything else that you need to know over the course of the day. Thanks for watching, and do stay tuned to Bloomberg Quint.